Good day, everyone. I'm Dale Pinkert. Everyone ready to rock? I posted a link in the chat for everyone to play before we get into our trading day. I just want to make a couple of observations for everyone. And one I think is very significant is in the gold market. We've been looking for a top for the last week or so, different targets to the upside. Potentially, we're looking at it here. You have 1, 2, 3. Of course, one day or one candle does not a trend make, but getting pretty good divergence in the gold here. Crude, after a lousy start to the week, is recovering. Of course, there's an API report coming out. There are stocks reports. Euro is, on a stop hunt mission. I'm not sure if they're going to go for the 1080 stops or not, but definitely cleaned out the 1060, 960 stop. So dollar's still weak. How's everyone doing today? We have a great guest. Marc Chandler is going to be with us today at Mark Making Sense. How's everyone doing today? Hello, Khalid. On the end. Hello, JP. Welcome to our community. Roland, Izzy, Joe, Simone is new. Simone, welcome to LAR. Hi, Jax. Jonathan, Lebgen, welcome to our community. Matthew, Ryan, Ed Z, Abel, Roland, Borja, welcome back. Borja, how have you been? Abel, how are you, bro? Fame, Beetle. Everyone doing okay? I think U.S. dollar yen's beginning to dig its heels in here. I have a hard time wanting to short the yen down here. I bet he's thinking long here. Yeah, go ahead, shoot the chart. Hi, Ricardo. We're getting some pretty good action in the markets today. 2 days ahead of the NFP. Live Analysis Room. It's an acronym, Joe. Don't expect perfection at the crap table, JP, although I know you do. So we have some pretty good action here so far. This could be a failing rally in the guppy. There's so much going on, I don't know what to do. There's too much going on. Oh, yeah. What's the story here? Everyone doing all right? So, Alien, you have a buy here for a bounce in the end. Yeah, 1875. That was Giuseppe's target. Viv Stalker was talking about that in his Tokyo session, wasn't he? Nice look, Alien. Thank you for the tweet today, Alien. Thank you, Ziggy, for the tweets. Thank you, Ricardo, for the tweets. Thank you, Ron the Dutch, for the tweets. Thank you for this look, Alien and Yen. I'm not sure if it is. I sent Mark a message on Twitter. We'll see what he comes back with. We have time. Nice trade, Rick. Rick called this out yesterday. Little triangle here. Nice, Rick. Ricardo Picasso strikes again. Thank you, Rick. Hello, Borgia. Thank you, Borgia. That's a very good description of what we do here. Thank you, Borgia. Great description. Is that you, Tosin? Congratulations. Yeah, I thought so. You're the man. Hi, everyone. Is that you, Tosin? Hi, Timbo. How you doing, Timbo? Okay, you're the man. You shorted Canada in the hole and made good money. I bestow upon you the Man Award. Everyone congratulate Tosin. Tosin is the man today. You are the man. Leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you'll lose your head, your account. It will be dead. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you'll lose your head, your account. It will be dead. Use less leverage. Nice trading, Tosin. Nice trading, Rick. Nice trading, Larians. The best online trading community on the net. Paid or free. I challenge anyone to find a better room of this quality and caliber of ideas, even if they charged you $200 a month. GM Dale, who are you? And that was also Alien called that. Alien called it, Rick, yesterday early in the day. Yeah, this was a good one. So you and Alien also thought there was more left in the pound. I do remember Alien saying we could get one more rally towards 45 yesterday early. Maybe it was even Monday. All the days run together for me right now. 45.50. Beautiful look, Rick. So I want to congratulate you and Alien on believing there was more left to the upside on the pound. Hi, Izzy. How are you? So the only thing I recommended yesterday was I bought that break in crude oil down here. So it's very possible that this is the end of B. Rick's going for the long side of CAD here. Way overdue for some type of bounce. How much? Just a little day trade, Ricardo? I want everyone to play this song and bookmark it and bookmark this song and play it any time you're having a rough time. Love you, Zig. Play it. Okay, brother. So I want to show everyone the tweet that Ziggy sent out today, and Alien. Got some nice tweets. This one's from Ziggy. Might make you pucker up a little bit. That's from Ziggy today. Ouch. And as I said in my response to Ziggy's tweet here, is that I thought colon cancer was bad till I saw this. Does this make you squirm in your seat a little bit, everybody? Give me a Y if you're squirming looking at. Are you squirming in your seat? Give me a Y if you are looking at this. Any sphincter action going on? And then this was from Alien. Alien sent a good one. Oh, I also want to show you what I got from Marc Chandler. Marc Chandler said, this is from Marc Chandler right here. And Marc's a very famous guy. Marc Chandler said, the day I don't learn anything is the day that I leave markets. You are partly responsible for extending my career. Thank you. Isn't that beautiful? From a guy like Marc, thanking me for extending his career. I think it's pretty amazing. And then this one was from Alien. Anyone who wants to participate in my stream is welcome. Alien, I never lose. Either I win or I learn. LAR, dream big. Hi, Luimo. So I want to thank everyone, and Ricardo, he's in my stream. I tweet Ricardo's charts, other people that don't even come into LAR. But I want to thank you guys for your support of our community through Twitter. So that's all I got. We could go back to making money now. That's my Twitter deal today. There's Rick. Rick was looking for a break to hold in the S&Ps. There are some people talking 1860 first. They're probably looking for this, Rick. It's a brave trade. Thank you, Ricardo. Nice look for potential pop in the S&P. Everyone thank Ricardo Picasso. Hi, Cyril. How you doing? Thank you, Ricardo. 1890, okay. Who enjoyed the interview with Tika yesterday? Rick's friend. Everyone enjoy FX Tika? Graciela yesterday. I thought my favorite part of the interview is when I asked her what the #1 rule for trading naked was? Yeah, that shows how weak it is, huh? And I said, keep the shades drawn. I love the interviews. And then the day before with the FX Italian Stallions. Yeah, she's very good. And I believe it was Giuseppe Locatelli was talking about the Italian markets are rigged. And I asked if the Vatican was involved in manipulating it. They laughed. Good to laugh. Okay. The New Yorkers, huh? You sound like Ted Cruz, Tosin. Those people with the New York values might reverse all of this. Those manipulators, those New York manipulators, Trilateral Commission, the Bilderbergs might come in and flip the market. The Trilateral Commission might be in there doing something. The plunge protection team needs to go to work today. Right, Tosin? So Khalid and I went into the crude right here. So if you took it around here, you have about 130 pips. You should not lose money on this crude trade if it reverses. Okay. Khalid, you taking partial profits here? Decaded? Everyone doing okay? Notice how the room is growing. Notice how the room is growing. See if I got something to mark. Not yet. Ricardo, I'm retweeting your S&P call right now. Everyone doing okay? Everyone doing okay? Hi, Goldie. How are you? Nice trade, Khalid. Nice trade, brother. Yeah. There should be. I don't know. Look, you may think I'm crazy. I still think crude can go to $40. Or 26. Well, this could be A and this could be B, and then we get C. up to 40. It'd be a 1.23 fib extension of this. The whole world's bearish crude. Yes, Tolson did. Okay, could be. But just keep in mind, I'm wrong at times, you're wrong at times. On the rumor of the Saudi, Tosin, on the rumor of the Saudi Russian production cut rumor, I said that could be the high. It was the high. I got out Friday. So maybe. Just remember, all of us are wrong at times. So I could be wrong, and we could go to 26 for one more low. But I'd say that's the consensus view. Would you agree? I'm not picking on you. I'm just saying be humble. Be humble. Okay, a right shoulder. Oh, yeah. So it could get to 33. Yeah, I see that now. Good eye. That's a possibility. Hello, Levgin. Welcome to LAR. Everyone welcome Levgin. I don't know what to do about the euro right here. Maybe we're on our way to 113, 114. Everyone welcome Levgin. I thought we were going to go for the stops under 108 first. I was wrong. Newsflash. Pinker was wrong. So probably we're going for all the stops above the market now. You know, they got these stops, Levgin. They want these stops at 109.80, and they probably want the stops over 110.80. They probably want these stops. So it looks like it's trying to break out of an ascending triangle. So you just take this low here, call it 107, call it 110, should take you to 113. I hope that helps. You may want to wait for a close over the breakout area to go with it, just in case it's an intraday thing, but it does look like it wants to come out to the upside. You're very welcome. I'm never afraid to say I'm wrong. I'm wrong every day about something. I'm also right every day about something. So I'm right, I'm wrong. I don't know sometimes. I wish I had stayed in bed some days. I feel like a genius sometimes. But you know what? Everything is just another trade. We magnify the importance of every trade. Don't do it. It'll make you sick. Don't do it. Don't magnify the significance of every trade. You'll never have longevity, or you'll make yourself sick. How about an amen on that? That every trade, win, lose, or draw, is just another trade. This from Coach Pinkert. Every trade is just another one. And then you say next. Next. Everyone say next. This is a church of FX trading. Hallelujah, Goldie. Hallelujah, man. Next. Good, Izzy. Good, Luimo. Next. Everyone doing okay? Everyone all right? Say you want a new car, you gotta hang out in LAR. Say you rent and want to buy a house, stick with us before you click your mouse. And if you want to be a star, show your charts in LAR. Give me an L A R. LAR, rar, 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 rar. Rock on, LAR. You guys like our theme song? Everyone like the theme song? All right, Mehmet, how are you? So I want to get some views on gold from the house. I know that we've been looking for a high in gold. I think that we may be getting it. What do you think, Rick? Hello, Timbo. Rick, Alien, anyone else? I'm as brilliant as a diamond. You better put on your shades. $74, $75. Ricardo Picasso's look at the guppy. Yeah. Or we get 1, 2, 3 right here. That's a big channel line. 77. Thank you, Rick. Great look on the guppy. You're still waiting for one more spike? Okay. Maybe it's on the NFP. I just put on my Nostra Pinker glasses here. The NFP is going to be weaker than expected, and bad news will be seen as good news, as it will put the Fed on hold with a weak NFP number. That is what I see through my Nostradamus glasses. That is my call. The next one is yours. If you want these glasses, get a hold of Ziggy. They've improved my trading 100%. You're all over the place, man. Flash, do you have a note? Flash, do you have a note from your mom? Rick, your trades make my head explode. Okay, what's the excuse? Did the dog eat your homework? Or the wind blew it away? Give me a why if you think we should put Flash Trader in large attention today. Or an N if you think we'll give him a break. 45.90? What do you want to talk about? Is it still running? Yeah. So the EG misled me. I was right about Euro pound, but this time was about pound strength. So this is what had me negative the euro, positive the pound was Euro pound. It's still working lower. I still think we're going to the 74.20 level. All right, so Flash, we're giving you a pass on being late. So this made my bias bullish the dollar. Okay. So Rick's making money on his long CAD pop from 38. And Goldie made money on the shorts. Tolson made money on the shorts, and they're gone. So nice looking channel here. So maybe I'm wrong about the crude. Canada's going to rally from here. Or maybe the correlation breaks down. Maybe I should take profits and get to the sideline. Nice look on the CAD 4 hour. Who was this from? Alien? Thank you, Goldie. Yeah, it was Alien. Thank you, Thank you, Alien. Yeah. Everyone doing okay? All right, I flattened out a crude. You guys talked me out of my long crude position from yesterday. Yeah, okay. Thank you, Alien, for showing me that possibility in crude. I got out, made a little money. Thank you guys for helping me with my trading today. All right, Addenda, I have Mark's email. Here you go. So there's a few dots in there. Okay, Addenda? Thank you. Thank you, guys. I'm going to take a quick break now. I want to thank everyone for their contribution so far today. I love each and every one of you and your giving spirit and coming here and giving your best to everybody without an agenda, just an agenda to share and help others. So I want to thank each and every one of you for your giving spirit and the sharing of your great work. And I'll be back in 5. Okay, I'm back, Adinda. Thanks for talking me out of my long crude position. Toast in alien. Everyone okay? Scalp. Ricardo shorting pound here. Okay. Thank you, Larians. Stick around for Marc Chandler. Who follows Marc Chandler's work at Marc Making Sense? So we have some Larians top picking pound here. Wow. Everyone doing all right? There goes the yen. Now we're almost at that buy point. Pretty weak rally in Guppy. Flash here, the chart here today. Okay, looking to take profits up here. Thank you, Flash, for sharing your work. Nice channel. Everyone thank Flash. Everyone doing all right? I think this analysis, it's golden. It's between oil and the CAD. Thank you, Rick. That makes sense. I thought we might get to 44, but maybe not. Thank you, buddy. You're buying the oil at 30.45 for a scalp. Confirmed highs are, there's probably plenty of examples here today. I want to thank Ricardo for his correlation work between crude and Canada. Okay, Flash. This is a confirmed high in Euro Yen. See this? Price and momentum confirmed. There's an example. Do you see it? Did you see that, Flash? This is close to a confirmed high. No, both made new highs. This was a new price high, and this was a confirming RSI. Depends on TFs. It's just a reverse with lows. So do you get it? Hello, Sinatra. ISM coming out. Okay. Thank you, Tozen. It's nice to have agreement across all time frames. Everyone doing all right? Marc Chandler should be with us shortly. Stick around for Mark. Everyone doing all right? Everyone doing all right? Marc Chandler will be with us shortly. Hello, Novice. How are you? Actually, Novice, I do a coaching session I've done with Izzy. Izzy's taking it. 1 hour on the euro. Yeah, it's confirmed. It's a new high in price. Okay. New high in price confirmed by the RSI. But you have to wait for the candle to close too. You get that flash? Or you could just be patient and you'll get the hang of it soon. Basically, Novice, it's when price and momentum's making a new high, took out this high, right? So both price and momentum are confirming the move. Okay. Stick around for Mark. Should be here pretty soon. Everyone doing all right? Stick around for Marc Chandler. That Mark making sense. No. No. I look for divergences. I need divergences. Yeah. So much for that, huh? No, I look for non-confirmations. I need a couple non-confirmations before I expect a reversal. See ya, buddy. Thank you, Alien, for all your looks and getting me out of the crude. If crude explodes, I'll yell at you tomorrow. Which is what it's doing right now. Thank you, Alien. Yes. I think momentum is a market tell. That's why I renamed the RSI from Relative Strength Index to Real Simple Implicator. What the RSI implies is more important to me than its reading. the implications of confirmed highs and divergences, or confirmed lows and non-confirmation divergences. And just like everything else, it doesn't work all the time. Just like everything else. What do you have, Goldie? Goldie's got looking for 123 on this. What is it? What is it, bro? What is it, Goldie? Oh, okay. Thank you, brother. Everyone doing okay? Just waiting for Mark. I think I hear Mark in the room.
Yep, I'm in. Dale, how are you?
Mark, hi. How are you, brother? Happy New Year. How's it going with you?
Happy New Year.
So, great to see you on a day when the dollar's taking a major hit. So I know that the last time, everyone welcome Mark to our community. Marc Chandler, one of my heroes from 50 years ago. Mark, you're my hero from 50 years ago. I'm just kidding, but your work is outstanding, Mark. And last time we talked, you said you were a reconstituted Euro bear. And the Euro is going right. Is my memory still working? Work is outstanding, Mark. And last time we talked, you said you were. I'm getting an echo, so if you could turn off the room, if you're in the room, that's where the echo is coming from. Right.
Yes. I still hear an echo. Something I can do?
Are you in the LAR room? Are you in the room? Are you in the room, Mark?
I think so.
All right, well, get out. Close the LAR window. We won't get in the LAR room.
Close the smaller window?
No, not the Hangout. The LAR. The LAR. If you're in LAR right now. I'm not hearing an echo now.
I'm not sure what you...
Okay, if you went into the live analysis room, that's where the echo is coming from. And you need to close that.
I don't understand. What do I close?
Okay, look at the instant messenger. If you went into the live analysis room, that's where the echo is coming from. And you need to close that. Our page.
I don't understand. What do I close?
Why don't you log out and do it again? Because it's echo, it's not going to work for us. Okay. We'll see if it works this time. Euro USD is coming off a little bit. I really want to hear what Mark has to say, so we'll be patient with these technical difficulties. See what happens next time he comes in. Here we go. Hi, Mark.
Is it better?
It is.
Okay.
Okay. So, yeah, no echo. And I told everyone to be patient because I really want to know what you're thinking in here, Mark. Last time you were here, you said you were a reconstituted Euro bear. Euro's still holding the lows from last March, and looks like we have some stop hunts, taking out stops over 960, maybe 109.80, and the grand prize would be above 110.80, which was the highs soon after the disappointing Draghi ECB press conference. So great to have you with us, Mark. What are you thinking in here with the dollar selling off? Is this a dollar buying opportunity?
Yeah, I'm a bit frustrated with the price action. I do recognize, of course, that the market thinks that even though Yellen is dovish, they think that the Federal Reserve will not raise rates, not just 4 times that the Fed says, but the market's not even pricing in one rate hike. And so I think this is taking a toll. My sense is that in the big picture, though, here's what happens. If you're a bank and you have extra liquidity and you bring it to the Federal Reserve, they're going to pay you 50 basis points. You bring it to the ECB and they charge you 30 basis points. The German yield curve is negative out to 7 years. The Japanese curve is negative to 8 years. And so I can't explain exactly what's going on here. I see stops being triggered. I see us moving to the upper end of the Euro's range that we've been in since early December. I'm just hesitant to say that this is the beginning of a big bull market for the Euro. I still think that come middle of March, the ECB could still ease policy, cutting the deposit rate further beyond negative 30 basis points. So I think, of course, we have to respect the price action, and that's why we have stops, and that's why the key, it seems to me, and this is, I think, a point that you often make, Dale, is that the key is really risk management, money management. Predicting the future is a small part, and perhaps even an unimportant part, of how to make money in the markets.
Okay, so it's very possible. I know there were some people looking for 113, 114 to complete in Elliott wave terms. Wave 4, which implies another one to the downside. So we could be setting up a great dollar buying opportunity. The other part of the equation was Kuroda coming in, and we had that graveyard save in U.S. dollar yen at 116 when the S&Ps were down 500 a week and a half ago, Mark, and we're back underneath where the BOJ, where Kuroda came in and made that announcement on the move to negative rates. So perhaps what we have going here is people losing confidence in central banks. For it to give up those gains so quickly, what's your take on it?
Yeah, I mean, so when I try to forecast or even understand what the yen is doing, I tend to look at a few variables. One is a 10-year interest rate differential, and as you know, the U.S. 10-year yield is down about 40 basis points this year. The second thing I look at for the that I think are drivers for the yen is the stock market. So what I would say is that the easier BOJ monetary policy that caught us by surprise on Friday last week has not been enough to lift global equity markets. And so it's not the story. I tend to disagree with people who call the yen the safe haven. I don't think that's what's happening. And it's not what's happening with the euro either. I think what's happening is that people have used, that is, when I say people, I mean some of the retail speculators, but really the large pools of capital like the hedge funds, CTAs, other players in the market have in effect borrowed euros, borrowed yen to buy other things like equities, like bonds, like emerging markets. And as those markets go south, they have to unwind the whole position. That is, the reason that the yen is strengthening is not because people are buying yen as a way to find a way to hide out and preserve capital. It's really as they exit trades. And these trades are complicated, and they're cross currencies, they're cross asset classes. And so my sense is that the euro and yen strength is the unwinding of risk assets, whether it's long. Think about what happened: long Aussie, short
Yeah,
euro, short yen, short Canadian dollars, big
right.
squeeze. And so I think that these positions are being unwound, and that's really the driver here. I don't think that's fundamentals. Again, for me, the key fundamental is interest rate differentials. And even if the Fed does not raise interest rates at all this year, of course, there'll be some adjustment, but the fact of it is that the interest rate differential still favors the U.S. dollar.
Okay,
So
so
I do.
go ahead.
I was just finishing the thought that I do recognize that there are the technicals. That's what I mean about respecting the price action. I had noted a head and shoulders top in the yen, which projects actually I think to the below 110.
Yes,
And like the head and shoulders bottom in the Aussie, I don't think that we reach our objective, which I believe the Aussie's objective is near 72.50 on that head and shoulders bottom.
right.
I don't think we reached there, but sort of second guessing the technicals.
You know, thank you so much because the request to bring you back was your top shelf in knowing about money flows. So that gives us an understanding that euro strength and what's happening in the yen is based upon the unwinding of the carry trade, and the main driver of unwinding that carry trade probably has been a two-way street happening, and maybe even more of a one-way street in S&Ps. Bonds still performing quite well. So is it possible that it's going to take stabilization of the equity markets for the dollar, or is it the tail wagging the dog that dollar stability will bring money flows back into U.S. assets, not just bonds but equities, and the dollar could resume its uptrend? Because the dollar's been trying for a long time to get through that par level, Mark, and every attempt has failed so far. I think it needs to do that. What are you thinking here?
Yeah, no, I agree with you. Here's what I'm kind of thinking. You know, the first thing about what happens, people come back from New Year's, and I'm talking about people who are looking like asset managers, fund managers, pension fund managers, and so they're not prepared that very first day of the year to buy, because people don't buy the first day of the year. They want to get their like sea legs back underneath them. And what happens is that first day of the year, the Nikkei, the German DAX, and the S&P 500 all gapped lower. And I tend to put a lot of importance in gaps. It's my experience in the futures market. I watch those gaps closely. To me, that was a very bearish sign. But the driver at the time, remember that first week of the year, the driver, people said, was China.
Right.
Now it seems that in the past couple of weeks, it looks almost like the Chinese currency is repegged to the dollar. It's been in such narrow trading ranges. The rally in the Chinese stocks yesterday did not fuel stock market gains in the U.S. yesterday. And so I think the first step was decoupling from China. And now I think that people are so focused on oil prices that I think, so now we've become decoupled from China, and now I think slowly we got to become decoupled from oil. And I think that might take some time as well, because that's really been such high correlations. People are reluctant to fade that quite yet, even though over the long term the correlation is not so tight. So I think that we need to see a couple of things fall into place. We need to see the market stay decoupled from China, and as you know, China is going to go on an extended vacation next week for the Lunar New Year. So China is really going to be out of the equation for a week. We got to watch those oil prices, and I think that we're already seeing, say, the Canadian dollar become a little bit more decoupled from oil prices. So that's a healthy sign. And I think that what we have to be looking at, and I try to think this through. I mean, not just, it's sort of like for me a chess game. It's not just thinking about the next move, but thinking about couple moves down the line. And so I think about what kind of bottom should we be looking for. Some people said that this move was not driven by fundamentals, and we should have a V-shaped bottom. I didn't really buy into that. Some people say it really is driven by fundamentals. We should have an L-shaped bottom. That is, we have a sell-off and we just don't have a recovery. I'm not convinced that's the case either with the ECB and the Bank of Japan in a very aggressive easing modes. And even with the Federal Reserve, the 25 basis point rate hike, I think the Fed is still it's hard to say that 25 basis points is tight money supply or tight monetary policy. I think we've gone from super accommodative to very accommodative. And so I'm thinking that we should have a W-shaped bottom.
Okay.
And so I think that's what we're really carving out.
Getting the whole alphabet here, Mark. So
everything but zero.
W. So W, no, that's great. So W implies a few retests or at least one retest of the recent low.
Exactly, and that might be what we're experiencing.
Okay, yeah, that's a great analogy. So when you talk about things like the decoupling because the yuan has stabilized, why are people using the Hong Kong dollar as a proxy now that the slide in the yuan has stopped? People have been pressing the short side of the Hong Kong dollar, and actually the Hong Kong market has been under severe pressure as a proxy. Why are they doing that? Because they don't want to fight the PBOC?
I think almost to the contrary. I think that in effect what's happening is I think there is, judging just from reports I've read, I mean, at Brown Brothers, our client base in foreign exchange is real money. These are pension funds, mutual funds, unit trusts, life insurance companies. So I don't see the hedge fund flows the way I used to at other banks I've worked at. But reading the stories on Bloomberg and Dow Jones and Reuters, it seems to me quite clear that the hedge funds have amassed there's basically a speculative attack by the hedge funds on China. They think the Chinese currency is overvalued, Chinese stocks are overvalued. They're trying to sell it. China's central bank, China's government, is in effect fighting these hedge funds and speculators. And the first thing they did, basically, it seems to me, is they tried to squeeze on the China side. The
Right.
locals there, limiting capital outflows, punishing banks. Now they shifted the front of the battle to Hong Kong. As you know, the Chinese have two currencies really. They have the onshore renminbi, we call it CNY, and the
Right.
offshore renminbi, we call CNH. So speculators are really focused on the CNH market. And in order to squeeze them out of the CNH, that is, to short the offshore RMB. In order to squeeze them out, the Chinese officials, the PBOC officials, have had to really work hard, not just intervention, but in effect what they did is try to trigger a big short squeeze. And this is to jack up money market rates in Hong Kong to make it very expensive to get funding and to be able to short the offshore RMB. And so I think that what's happening in Hong Kong is partly a function, largely a function, of China trying to squeeze out speculators. And remember what happened initially. Initially, that money leaving China was going to Hong Kong. And this is ironic in a way, right? If I take my money and go to New Jersey, it hardly counts as an export from the U.S., a capital flow from the U.S. Hong Kong, the problem is that China has Hong Kong and they don't have an open capital account. So they want to treat the money in Hong Kong differently than they treat money in China mainland. At the same time, this is not just about money, but think about trade. China considers exports to Hong Kong exports. But yet when New York sells stuff to New Jersey or to Massachusetts, it's not an export. So a lot of this, I think, is China sort of struggling with its a little Frankenstein that it created by having this onshore and offshore market. The best solution for China would be to open up its capital account and to get rid of the CNH market completely. But this is a big step for China, and here's why. You know, I think that many of the listeners and viewers can appreciate this. I began my career on the floor of the Chicago Mercantile Exchange. And you know where they trade the currency futures? Right next to the livestock futures. Right next to the pork bellies, live cattle. And as most central bankers don't want their money to be treated like that. They think that of all the prices that an economy generates, the price of money is the most important. And so most countries don't really embrace what the U.S. often argues for, and that is letting markets determine exchange rates. So the Chinese are wrestling with this. They're not about to adopt free market mechanisms for its currency. And so I think that part of this is the ramification costs the only, and that's China, and that's Hong Kong, rather.
Okay, what a great explanation, Mark. Great clarity for what is really opaque in China. I'd like to pose a question, get your view. There are, you know, with this ongoing strong dollar, ongoing weak crude market, putting immense pressure on emerging markets. The emerging markets would welcome a weakening dollar. Many countries would, as well as a recovery in crude oil prices. And interest rates don't seem to be the fix. But you and I were around in 1985 for the Plaza Accord. Yep. Is it possible that we're going to have something like this in the works should the dollar break out over 100, put more pressure on emerging markets and commodity prices, that the central banks will get together, cooperate, and not use interest rates as a tool? But you say that the U.S. rarely intervenes in currency markets, but they were a big intervention player in the Plaza Accord. Do you think we could have a Plaza Accord 2.0?
I suppose we could. I mean, now that we have such negative interest rates, I suppose anything is possible. But I think that the lesson from the 08-09 great financial crisis is that, we did it, that we went through the crisis with very little foreign exchange intervention, especially among the major countries. So I think that one of the lessons learned is that it's probably that there might be other tools, and remember at the time they developed these swap lines to provide this extra liquidity. But I'm not so sure that the G7 countries would organize a Plaza agreement to drive the dollar down against the emerging market currencies. Many of those emerging market currencies, in some ways, I want to say that the weakness of those emerging market currencies, while it's very painful for investors, is probably more of a solution, part of the solution for these emerging market countries. Think about it. Many of these, when we think about emerging markets, many times we think about commodity-producing countries. And that's especially in Latin America, Brazil, Mexico, Peru, Chile, Colombia. So they've been hit, like Australia and Canada, have been hit with a terms of trade shock. The price of their exports have collapsed. And a weaker currency is partly a way to deal with that. And I think that the other problem is, and we've seen this movie before, Dale, right? Here's what happens.
Yeah.
U.S. interest rates are low, so and the dollar is weak, so foreign central banks, foreign governments, foreign companies borrow dollars. They have a currency mismatch. They bring that money home because it's cheaper to borrow dollars and swap back into the local currency than raise local currency debt itself. So things go fine until they stop. And that is commodity prices sell off as they invariably do. The dollar strengthens as invariably it does sooner or later. And now these countries and companies have this big currency mismatch. And that's what I would say about China as well. Part of the capital outflows from China, part of the capital outflows from the emerging market countries are companies and governments paying back their dollar debt, trying to retire some of their dollar debt or service it at least because it's so expensive. It's more expensive than it was initially, especially when they have depreciating currencies. Every time, when you think about emerging market crisis, almost every emerging market crisis has been preceded by tighter Fed policy because we're in this big cycle. And sort of like why I look at chart analysis, even though I'm a fundamentalist, I'm an economist, strategist, I look at the charts because of the basic principle that as smart as we might be as individuals, as a group or as a crowd, we can't seem to get out of our own way, and we keep repeating certain things, which is why patterns work. Crowds continue to repeat themselves. And I think that this emerging market crisis is one of these patterns. And this is so I think that the stronger dollar really is partly an effect and partly a cause of the problems they have. I don't look for a new Plaza agreement. I think that what the ECB is telling us is that they're going to be easing policy at least until March of next year. The Bank of Japan doesn't even have an exit strategy yet. And I'm not sure we're at the peak yet of their easing. And so it seems to me that when we can get that kind of Plaza agreement type of scenario, I think, is when we're at the end of the rope with the ECB. When the ECB says, okay, our QE has worked, we're now going to begin, we're going to taper, we're going to begin raising interest rates. And same thing for Japan. And I'm afraid to say that I think we might be years away from that happening.
Okay, so let me ask you about this. On a geopolitical level, the Saudis are very unhappy about us and our nuclear accord with Iran. They're in an oil war. Their budgets are stretched. Is it possible that because of the falling out between U.S. and Saudi Arabia, they went into Yemen of their own accord, that a depegging of the rial from the U.S. dollar is a possible game changer if they become that desperate to go ahead and do it? And do you think that is a possibility for other nations to depeg from the dollar? We've only had, besides China, this was kind of a depeg by letting the yuan float. The only other country I've seen do it is Azerbaijan, so a very small country. Do you think it's possible that some of these EMs, and I think if the Saudis do it, it would be a game changer for global markets?
Yeah, well, it's interesting because I'd say a couple of things. One is I think from the U.S. perspective, they've often, I mean, at the G7 and the G20, the U.S. has been able to sort of win the debate and have both organizations, the G7 and the G20, endorse floating exchange rates. So I think that many in the U.S. Treasury would welcome floating exchange rates from Middle East countries. So I'm not so sure that if the Saudis were to break its peg, I know that the markets would be up in arms about it. But I'm not so sure that the U.S. Treasury would be that opposed to it. Second thing I'd say is that the Saudis have lived through much more difficult times and kept the peg. The Saudis are not pegging to the dollar because they like the U.S. or because of Operation Desert Shield, the first Iraq War.
Yes.
I think they do it because they see it's in their self-interest. And imagine what would happen to the Saudi economy if they were to let the currency apparently depreciate. I think it would be a greater hardship for the Saudis. Remember, they export oil. The export of oil doesn't really depend so much on where the rial is trading against the U.S. dollar. The Saudis have stopped, it looks like, we can't tell Saudis per se, but OPEC countries are not buying the kind of treasury bond that they used to buy.
Right.
Of course, I think from the U.S. Treasury perspective, the government would probably be happier if the Saudis would buy more U.S. goods and services and buy fewer U.S. Treasury bonds. So, specifically, Dale, I do not expect either the Hong Kong peg or the Saudi peg to be abandoned anytime soon. And
Could this
it reminds me of a time. I'm sorry.
Go ahead.
Yeah, but before I got involved in the markets, I believe it was in the late 70s, there was some talk, and I haven't been able to verify this because a lot of people don't report what's going on in the Middle East so much in the finance, but I'm under the impression that there was some pressure on the Saudi peg at one point. And rather than devalue, first the Saudis revalued and basically crushed all the people that were betting for devaluation. And after these people were wiped out, then they proceeded to devalue the currency. So
Sounds
I
like
think that what the Chinese
sounds like the SNB.
Yeah, what the Chinese have shown us, what the Swiss have shown us, and I think what the Bank of Japan showed us last week is that if you're a speculator and you're betting against the central banks, you've got to pick your shots very carefully. That central banks still hold, it's sort of like the golden rule, right? He with the gold makes the rules. Central banks have the gold, they have the power, and they have the will at times to express frustration and anger at speculators. And I know a lot of people that have lost a lot of money over the years fighting the central banks.
It is much more difficult now. I actually remember a trader on the IMM. His last name was Bregman. Do you remember him? He used to take on the banks and used to fade central banks. It seems like it's been a losing game in the last central planning episode. Do you think, Mark, that part of the dollar weakness from last spring or stability has been due to energy weakness because we are a petrocurrency and less demand for crude, or less petrodollars coming into a bear market in crude has taken one of the legs of support out from the dollar, and if we ever got a recovery in oil, that could be a prop to reinstate King Dollar?
Yeah, I don't know. People. I remember when oil prices back in 2008 were about $150 a barrel, and people said this was bad for the U.S. The U.S. is a big energy consumer. And even now, when we think about our production, we're only producing about half of our need. I'd hardly call the dollar a petrol currency, but I think you raise a good point, and there's another methodological point. For me, how big is the foreign exchange market? It's roughly $5.2 trillion a day.
Wow.
The important thing about that is that capital flows then outstrip trade flows. So when I try to think about which way currencies should go, major currencies like the dollar, the yen, the euro, sterling, I tend not to focus so much on trade in goods and services. I tend to focus on those things that attract or detract capital. And so for me, I'd say that my sense about what's happening with oil is that, and I mistake this as well. I mean, I thought that the drop in oil price was going to be good for the U.S. economy, and I didn't really take into account the sort of sequence of events. I think it is good for the U.S. economy. Look at what happened to auto sales. Last year, record auto sales. And part of that is fueled by low interest rates, people having jobs, but also low price of gasoline. But I think what's happened with the oil is that the first, it's sort of like there's good news and there's bad news. And first we get the bad news. It hurts industrial production. It hurts capital expenditures. It hurts durable good orders. So, it weighs on the manufacturing sector. But it seems to me that looking at the ISM for manufacturing, a couple of the internals, the number of industries that are really contracting is about a third. typically in a recession you get over half of them are contracting. And I also look at this this sort of an indicator. I'm looking at the relationship between inventory accumulation and new orders. And both of those measures, the inventories and new orders and the relationship, are really suggesting to me that the U.S. manufacturing sector is about to turn. They might be turning now, or it's going to turn shortly. And so that means, I think, that we've already paid for the bad news for oil, the drop in oil prices. We already know what's happening to the energy bonds, to the high-yield bond market. We know what's happening to jobs in North Dakota, for example. But now I think what we should be anticipating is the payoff. And I'm not crazy. I mean, I'm a bit green in the sense that I worry that the low price of gasoline makes my friends tease me that I have a Prius. And then what happens to environmental issues, and what happens to our movement towards a more a lower carbon use economy? I think that's the big race in the future, and I think that this drop in oil prices does it a disservice in the long run. But in the short run, I'm not so sure that if the dollar were to take off now, I think it would be. If oil were to take off now, I think it would be good for the U.S. because we are one of the few countries that can actually raise interest rates, and that would probably help encourage the Federal Reserve to raise interest rates if we see oil prices moving higher. Even though the Fed says that the impact is transitory, I think they've also identified that they like to see inflation rising before they raise rates again.
Okay, well, Mark, I'd like to wrap it up with the silly season. Where are you going to point your Prius? In what direction? Are you going to go to a Bernie Sanders rally, a Hillary Clinton rally, a Donald Trump rally, a Ted Cruz rally? Where's that Prius going, buddy?
Yeah, well, I come from Chicago, and we have two rules in Chicago
Vote
politics. Vote early, vote often. No, what I was thinking really is make no waves, back no losers. And so, as an investor, I have to separate who I wish to win from who I think is going to win. And I think it's going to be very hard. And I think that's important when we think about Fed policy too. Everybody seems to have an opinion about what the Fed should do. Everybody seems to have an opinion what the New York Giants should do, or what the Yankees should do, or even what my Chicago Cubs should do. But instead of having an opinion of what they ought to do, I spend a lot of my time thinking about what they will do. And so when I think about the U.S. presidential election, I think it's going to be very difficult, barring a significant, like an indictment of Hillary Clinton, for the Democrats to lose this presidential campaign. I think that the Republican Party is doing almost everything it could possibly do to alienate large constituencies, not just for today but in the future. I think about women, young people, Hispanics. And so I think that regardless of my own ideology, I think that the Democrats have a better handle on gaining those constituencies. So I think that we'll have a Hillary victory in November, but I'm not so sure that it changes a U.S. Treasury policy. I don't think it has much impact on U.S. monetary policy. I think social policy, perhaps trade issues, maybe we'll have to revisit the TPP a little bit. But for my outlook for the dollar, it doesn't really matter so much who wins the White House.
Thank you so much, Mark. Great to have you back again. I'm wishing you a great 2016, that pips fall on you, and that it's a flood that follows you throughout the year and your followers. And thank you so much for your tweet today, and I'm so glad that I've been able to help or serve in any way. I admire and respect you, Mark, and I'm proud to call you my trading warrior brother and Chicago brother as well.
Yes, Chicago. Thank you very much, Dale. Good luck. Good luck to everybody.
Thank you, Mark. That was Marc Chandler. Thank you, everybody. Did you enjoy Mark? You're not going to find a better guy for fundamentals. You're glad I'm out of oil? Did it get cream? Yeah. Good call. And congratulations, Tosin. Congratulations, Tosin. You made great calls today. I usually don't do it, although I've already given you the Man Award. So, great trading today, Tosin. Yeah, Mark's a great guy. And so you could tell that Mark is just viewing the strength in the euro as a technical phenomenon, And most likely it's setting up a great dollar buying opportunity down the road. Oh, look, Abel, you have an icon now. Look at that. Abel's got an icon. What is it? Yeah, I have to thank Alien for talking me out of my crude position too. It helped. Everyone doing okay? We're gonna have Norm Winsky Friday. And just a heads up, every time Norm wants to come on and do an interview, Norm will interview me and say, Dale, can I come on Friday? Dale, can I come on Wednesday? And the only reason Norm wants to come on is because we're close to some significant turning points in a few different markets, normally the stock market. So if Norm Winsky is coming in Friday, I think you could expect some type of reversal in a lot of markets the following week. That's an iceberg. Oh, okay, Adinda. Thank you for reminding me. You mean I'm not the only star on FX Street's 24/6 YouTube channel? You mean there are other stars besides me, Adinda? Come on. I'm the big star. I'm a big star in my own imagination. So I hope everyone, yeah, that too, Abel. Yeah, inflection points there as well. So I want to do a wrap up here. Dollar got crushed. This surprises me in the euro pound. We never got down to the 74.40 level, 520. That was it in the guppy. Euro yen still looks like it could have one. I would actually consider longs in the euro yen because of this confirmed high. Canada, we had some people trying to bottom pick it today, covering shorts. Where is it? Sometimes my platform does this to me. Pound, some people have probed the top in the pound. Okay, that's where I thought it could go. All right, so we are getting a little reversal in the pound. Not the greatest divergence. But Euro Aussie was something else that I thought I would love. I talked about 57 early in the week. I didn't know how it was going to get there. But we're there now, right? Where's my Euro Aussie? Can't find it. So I agree with you, Rick. This is probably setting up a shorting opportunity in Euro Aussie. So that's going to be it for me today. I can't find the chart and my platform's moving very slow. Nice shot, Ricardo. I want to thank everyone for their contributions today. I want to thank Ricardo, as usual, great views. I want to thank Mauricio Carrillo for no good reason, just because I love him. Sinatra, Adinda, thank you, Adinda. Timbo, Cyric, Izzy, JP, Goldie, thank you for your looks. Aliens Gone, Novice, welcome to LAR. Forex Stop Hunter, good job, Dale. Fab, love you, brother. Beetle, Ron, so great to have you back. Levkin, welcome to LAR. Joe, DK, Khalid, nice out on the crude. Ziggy, Roland, Simone, welcome to LAR. JM, Abel, Ozzy, Stewart, Bib Stalker, Bib Stalker nailed the NBW. Jax are wild. Thank you, Jax. Matthew, Ryan, Gandalf, Ed ZFX, Fame FX Trader, Ed ZFX, Borgia. Thank you, everybody. Good hunting. Remember, don't just count your pips, count your blessings. Hope everyone enjoyed hearing about the fundamental aspects from Marc Chandler, my trading warrior brother, Marc Chandler. And remember, I know you guys have had a successful day, many of you today. Don't just count your pips, count your blessings. Make your time count, because money comes and goes. Time is gone forever. Thank you for spending your most precious currency, which is time, in hanging out in LAR with me and everyone else today. And I'll see everyone tomorrow. Adios.